So far, what we have in terms of Dodd-Frank, to the extent that any of these have been implemented, is essentially a structure in which to send the ambulance for the patient, essentially, as opposed to prevent the need for the ambulance.
That's correct. And I believe what Mary Miller would tell you is that, well, the Basel III process, which we discussed before, includes a lot more capital requirements, and the banks are well capitalized, and we did these stress tests that show that even in an adverse scenario, banks would still be solvent, and no harm, no foul. What you have to understand is that Miller's main talking points, everything that she discussed in this large speech, which you can find on the Treasury Department's website, it all mirrors a series of reports put out by the financial industry directly to rebut Brown-Vitter. And these reports come from the likes of Goldman Sachs. They come from the Financial Services Forum, which is a large trade group. And they come from this thing called Hamilton Place Strategies, which is essentially a PR firm that has the big banks as clients. And it's run by the last three communications directors for the last three Republican presidential nominees. So whatever Mary Miller is trying to peddle, she just know that she's peddling the exact same things that the financial industry has been peddling when they've been trying to react to Dodd-Frank and this, or not Dodd-Frank, but Brown-Vitter and this sort of bipartisan movement to break up the banks, restrict their size, restrict their power, restrict their influence.
Well, all right, to be fair, you're probably pretty busy if you're in her position. And so you may only have time to cut and paste certain things if you've got to come up with a speech. But more seriously, she also cites, I suspect she would also say, well, the Volcker Rule. The Volcker Rule also helps in this regard in terms of preventing banks from overextending themselves. But the Volcker Rule is just like the rest of Dodd-Frank. It doesn't really exist yet. The idea of it exists, but how the rubber meets the road doesn't really exist yet, does it?
It doesn't exist at all. Treasury has not finalized the rule. The interagency process has not come to a conclusion. And we know this because J.P. Morgan Chase last year, with the fail whale trades, basically did something that could have been illegal under the Volcker Rule, but we have no idea because there is no Volcker Rule at this point. So citing that, which he did, is not something that we should take seriously.
So in some respects, it seems like at this point that Dodd-Frank has basically become this sort of straw man or straw law that is used essentially more effectively to prevent any further reform than to actually engage in actual reform.
What you should know is that in these various bank and bank lobbyist reports, the fact that all of them, to a man, say that we don't need this new large capital requirement, which is going to restrict lending and hurt the economy, because Dodd-Frank is already doing that work. The fact that banks are saying this, banks who fought Dodd-Frank tooth and nail during the legislative process and continue to fight it during the regulatory process, that should tell you pretty much all you need to know. That the banks are the ones saying, no, don't worry, Dodd-Frank solved everything. We're much safer now. So that should pretty much give away the game right there.
Okay, so we have the White House, at least the administration, coming out in a sort of pre-buttal to this Brown-Vitter piece of legislation. What is the support? I mean, do you have a sense of what the support is in the Senate and in the House for this legislation? I mean, are we going to see, is it even going to get a vote? Is there going to be some type of debate, or is it just sort of dead on arrival?
I don't think it'll get a vote. What you saw was, predictably, when the executive branch says, give Dodd-Frank a chance to be implemented, now that's exactly what, for example, the head of the Senate Banking Committee, Tim Johnson, is saying, that we should give the Dodd-Frank rules a chance to work, a chance to be implemented, and we shouldn't contemplate a new overhaul of these rules before that time. So that's going to be the talking point, that Treasury wants time for this to work, and so we'll have to give it to them.
Has anybody stated a timeline? I mean, when we say time for this to work, I mean, it's been 3 years. We don't even have the laws aren't even written yet. I don't know that there's a timetable when that's said. But one timetable that you can look at is the fact that Tim Johnson is retiring. And he retires in 2014. And basically, if things fall the way they probably should, Sherrod Brown, who's the co-sponsor of this Brown-Vitter law, or proposed law, would be the head of the Senate Banking Committee. Now, at that point, the context changes a little bit, and if Sherrod Brown has the power as the head of the Banking Committee to move laws, he's probably going to do it. So it may be a good thing that you're not going to see this for a couple of years. I mean, it's bad because you still have a lot of risk in the system, but Sherrod Brown will be much more well-positioned should Democrats hold the Senate and he arise to the chairman's position at the Senate Banking Committee. And it gives it more time. I mean, I think the best thing about this proposal is that it puts something on the shelf. Right.
When we were in 2008, there was nothing on the shelf to deal with this financial meltdown, and so what we got was a series of bailouts. So now we're more educated about the problems in the financial system, and this would be on the shelf as an alternative to the theory that all we can do is just a bunch of new bailouts and keep the system as it is.
I don't think
this is the alternative vision.
I don't think the value of having solutions drafted as bills, basically at the ready, in order to deal with crises as they come up, I don't think that can be overstated, and I think that's something that has really yet to seep in. I mean, you know, the right and the corporate forces have built a whole sort of ocean of legislation preparing for crisis points. Preparing for opportunities, whether it's, you know, sort of ALEC and their model legislation waiting for a wave of Republicans taking over state legislatures. This is really crucial in that regard. Who, in the event that the Democrats lose the Senate, who would be the Republican chair of the Banking Committee? And is that would that be basically the death knell for this legislation?
Yeah, I think it would. I mean, that would be, I believe, Mike Crapo, who's a senator from Idaho. And he's already on the record against this process. But I will say that one interesting part of Brown-Vitter, obviously, is its bipartisan nature. And as I wrote in a previous article for the American Prospect, we're seeing a movement that's bipartisan to deal with the problems in the financial system, and particularly among conservative academics, not just sort of the Tea Party rank and file, but among, you know, people in think tanks, pundits, people like George Will and Peggy Noonan, people at the American Enterprise Institute, several facets of that conservative movement ecosystem has admitted that the banks are too big to fail, that they enjoy these subsidies, and that this is an example of what they call crony capitalism, where the government is sort of propping up these banks and they want to put a stop to it. So there are points of congruence there that are transpartisan, and I think that will help, particularly in the event of a crisis, regardless of who controls the chambers.
All right, so lastly, let me just ask you, not directly related, but an interesting development in terms of when we talk about committees and who chairs them. Max Baucus has announced that he really wants to get into lobbying before all the money dries up. I don't know if that's exactly what his speech was, but
I don't think that was verbatim. No.
That's not quite verbatim, but I can understand the dynamic as I watch producers go on from this program to to wonderful careers, one starts to wonder, wait, maybe, Baucus having the
They
most...
actually call the Majority Report, I think it's nicknamed the K Street Project.
That's right.
Because that's pretty much a pipeline.
Exactly. And Baucus comes in a close second in terms of producing the most amount of lobbyists on K Street of any other sort of public institution, I think, in the country. All right, but be that as it may, he is leaving, and of course, this is the committee, the Finance Committee, which basically, it deals with just about everything, it seems to me, that is relevant. Ron Wyden is set to be the chair. Well, tell me what the implications are from your perspective of this, assuming the Democrats hold the Senate.
Yeah, there are a lot of implications. The first thing is that Chuck Schumer is really first in line for both banking and finance, and he can't do both. He probably will do neither because he wants to maintain his leadership position. And that means that you get Wyden at finance and Brown at banking. But even if Chuck Schumer is encouraged by lobbyists or some other forces saying that we can't let these committees get out of control, he can't do both. So the good news here is that you're either getting Brown at banking, Wyden at finance, or both. As far as Wyden is concerned, obviously there's going to be a sea change if you're going from Max Baucus to Ron Wyden, who also, one of the knocks on Max Baucus in recent years was that he tried to get a bipartisan process for the health care bill, and he spent months trying to bring along people like Chuck Grassley. Wyden does have that bipartisan streak in him. He created Wyden-Bennett, which was a bipartisan health care bill, and he's done that on a number of other grounds, including getting in a lot of trouble with liberals when he partnered with Paul Ryan on this sort of premium support idea, although he disavowed the Ryan budget eventually. So I think Wyden will frustrate some liberals at some level more than is being said here, sort of in the preliminary discussions about it. But it'll be an interesting committee. Wyden is interested in a lot more innovative kinds of issues, I think, than what we've normally seen on the Finance Committee, which is take whatever K Street's giving you and run with it. He is currently the chair of the Energy Committee, so I think he'll have a focus on that. It certainly means some interesting stuff in the areas of healthcare and potentially in the area of taxes.
All right. Well, David Dayen, thanks for that analysis, and I appreciate your talking about this piece. In terms of bank reform, I'm seeking encouragement wherever I can find it. I'm encouraged that at least that this legislation, or the bill anyways, exists for what I perceive to be a fairly inevitable need for it hopefully in the far distant future, but who knows? And it's good that it exists in the event that takes place. David Dayen,
right,
go ahead.
The other thing I would say is that, a groundswell of support obviously helps anything move in Congress. And so if you like the idea that the banks would need to cover their own losses, tell your member of Congress that they should get on board with Brown-Bennett.
All right. David Dayen, thanks so much. Folks, we will link to that piece on the Majority.fm website. David Dayen, always a pleasure.